Jim, after the Fed announced its $1 trillion aid to help the economy, the dollar was really dropping. What are some good stocks to trade off of that?
Well, first choice, buy gold.
Okay.
I mean, gold's had a $60 reversal. Now, I've been adamant that you buy either the GLD or Agnico Eagle or El Dorado, symbol EGO. But I've been saying buy these all the way down, and when they got to 87, 86, buy more, and that worked. And I think gold should be part of the portfolio. As I said, buy down. There was obviously people said, why would you ever buy down? Don't you, that's just losing money. Well, using the method that I used at my hedge fund over and over again, you got gold at a really great basis, and now you want to let it run. Maybe trade some that you bought at 87. The other thing is though, and this is again, when you're on real money, it's a very difficult thing for me because I am always in my head a hedge fund manager. I'm on conference calls. Every conference call is the same. We would have done really well except for the dollar. We've done really well except for the dollar. Given the fact that there's a trade down issue, in other words, that you can't necessarily buy Procter & Gamble because people are buying cheaper stuff, but you can buy industrials that were doing okay that you think would therefore do better in a situation where the dollar declined. United Technologies, Honeywell, very good examples. Nucor, now that it's washed out, very good example. So a weak dollar is fabulous. And the only people who complain about, a lot of this is a homework-derived thing. The only people who complain about a weak dollar are people who are theoretical. As someone who is a micro guy who listens to conference calls all the time, as horrible and boring as that is, they're all about the same thing, which is that we would have been 6% up. Instead, we were 15% down because of the dollar. That was even General Mills. And General Mills didn't have much dollar. General Mills really blew the execution. I'm very angry at them. So Stephanie for ActionAlertsPlus.com. But the idea that the dollar's weak, go buy gold. The idea that the dollar's weak will make us more competitive. So then you say, well, are we going to start a trade war? Well, you know what? It didn't matter. There was no trade. And we had no trade. So who would have a trade war against us? Because we weren't doing any trading. So why fight it? Mexico, we've ratcheted things up with Mexico. That's our bad. But, the notion that suddenly we will have a trade war because we reduce the value of the dollar presumes that we were doing a lot of business overseas. We weren't. So it's not like they're immediately going to say, oh, trade war, trade war. They're going to say, oh, shoot, maybe people are going to start buying some American things again. But they probably won't.
All right, so definitely gold, some industrials. What do you definitely stay away from, though?
Well, I think that when you have a weaker dollar, there's no need to stay away from anything. And the reason why that is because we had a weaker dollar for many years, and it was very good for the stock market. It just adds the idea of owning gold. And I think that people, a lot of people think you should buy oil when the dollar's weak. And I even had to deal with that. I'm a very smart guy, and I bat a lot of these ideas back and forth. There's no holy grail to this stuff. There's no definite right, but there's a lot of people who like to buy oil when the dollar goes down, and that has worked today because there is a lot of excess supply of oil, so oil shouldn't necessarily be going up the way it is. I tend to look at oil as being a proxy for what the Chinese do, but this spike in oil right now may just be people who are hiding in a commodity that can preserve value in a declining dollar. That's worrisome with my pro-oil call, but I do believe that in the end the Chinese are a force to be reckoned with for oil, and so are speculators, and both are buying it, so let's stay long.
All right. Thanks so much, Jim.